Let's talk student loans. Yes, indeed. Because an open letter from a graduate to his MP showing how the interest on his student loan had increased his debt by nearly £1,800 in the year since he left university has gone viral online. Simon Crowther was in the first wave of students faced with the £9,000 tuition fees and says he didn't understand what he was doing when he took the loan out at 18. Now, his letter to his MP has been shared 38,000 times on Facebook and probably more since then. The student loans company, meanwhile, says the interest rates were clearly set out. Well, let's talk to consumer journalist Jasmine Birtles about this. Jasmine, good to talk to you this afternoon.
Hi, Yasmine.
So, what happened here? Is this a common tale of people not understanding a financial products? And if so, are we to be expected in sixth form to have our heads around all of this?
Well, good point. I mean, yes, it is in one sense, it's a common tale of people not realising, and it's also a common tale of ridiculously confusing and probably boring to read T's and C's. But at the same time, this isn't an ordinary financial product, an ordinary sort of commercial loan. This is a student loan. It's something that's, at least largely set by the government. And generally speaking, and I include myself in this, the understanding is that it's at a very low rate, either at inflation, which is currently, barely 1%, or even lower. So, that's how I understand it. Okay, I'm not a student, but, I'm around finance. I know about loans. So if that's what I'm thinking, no wonder he thought it. And as he says, he thought it was 0.5%. It turns out he's been paying 3.9%, which is absolutely outrageous. That's more than the average mortgage rate at the moment.
That's commercial sort of levels, if not more.
No, absolutely. I mean, he seriously, you can get loans cheaper than ordinary personal loans cheaper than that. Not that many, but you can certainly get mortgages cheaper than that. 2.95% is the average at the moment. Basically a full 1% lower than what he's paying. In a sense, had he been able to, he would have been better off getting a bunch of 0% on purchases, credit cards, and using those instead. So I think he has been sold a pup. I think. Although the student loans company or the company that's running it says, oh no, it was quite clear. Clearly it wasn't clear, not for a teenager, and I'm assuming his parents had a look as well. And it's like any company saying, well, it's in our terms and conditions. Who reads terms and conditions? Particularly the ones you get online now, they're screeds and screeds of unintelligible writing, and somewhere on page 6 in very, very small writing there's something about we will take your firstborn child. Who reads all these things?
And we all click yes. And this is the thing, I've got a statement here from the student loans company that said it's not the case that this individual's interest rate has increased or that their loan has been sold. The variable interest rates that would apply to his student loan are unchanged from those in force at the time of his application in 2012. All students that take out a loan must sign a declaration confirming that they've read the terms and conditions of the loan before it will be paid. Those T's and C's clearly set out the interest rates that the student will be charged when they'll start repaying, and when the interest starts accruing. And then so it goes on to say that the maximum interest rate for students who started their course on or after September 2012 in England and Wales is RPI plus 3%. That means the current maximum rate is 3.9%.
It's easy for them to say. As I'm listening to this, I'm thinking it's just like any company would say, and one of these big global companies, like Google or Apple or whatever, that constantly says, do you agree to these terms and conditions? Of course, we all go agree. You click that because you can't be bothered to read it because, even if you did read it, you probably wouldn't understand it. And I doubt very much whether it was made clear at all, because if it were, even if he hadn't said, oh, no, I don't think 3.whatever% would be good, his parents would be like, hold on a minute, over 3%. I mean, we
might as well get you a loan rather than a student loan.
Absolutely. So I think, one of the things that it says, I'm working with the Institute of Inertia at the moment, which is run by Compare the Market, and we are looking specifically at terms and conditions at the moment and how unintelligible and ridiculously long they are. So that's one of the things. But also, I think that generally speaking, the government hasn't made it clear at all that this is how much it is. There's definitely a general sense that the loans are very cheap and, hey, you're lucky to get one because, if you've got extra money, you could take the money and put it in an investment. Well, no, you certainly couldn't with this now, not at 3.9%.
But is the lesson then, it's a very hard one, isn't it, that, well, tough, because it was written in the T's and C's, so really you're going to have to get your head around these things at a much younger age and start taking responsibility, because it's not as if tuition fees are about to be scrapped.
Well, absolutely, yes. I think on the one hand, it is a warning. It's a big warning to potential students, anybody at school and their parents at the moment, to really look. And if you're a lawyer, really, really look. If you've got a friend who's a lawyer, go through it all. But also, I think what I'd like to see now is a campaign to force this company to put it in really seriously big letters on the first page, not in some terms and conditions, on the first page saying this is 3% over, as you say, RPI. So this means at the moment you could be paying 3.9%. In 2 years' time, you might pay 3.1%. You might pay 4.5%. Who knows? So that it's made very clear that you will never pay less than 3%. And that means over X number of years, it'll be so actual. I put actual figures so that one can understand exactly what it means. Yeah, and something concrete.
And just finally, Jasmine, then it sort of does make you wonder. I think you made this point that what's the point then of the student loans company if you can go and get something that's arguably potentially at points cheaper.
Yeah, absolutely. It's absolutely silly to have this, and this has always been the argument that it's all right. Okay, it's a loan, but it's very low amount of interest, and you'll be able to pay it off in bits and pieces as you get your money. But yes, if it's at the moment, if it's 3%, that's way more than one could be paying for. Well, you could get a 0% credit card. You could get very cheap loans in all sorts of ways. So, yes, I think it puts into question the whole student loan idea, particularly as, and this is another thing that never made clear to students, I think, the interest starts to be charged while they're still at university.
Well, you should say that students will only repay their loans at a rate of 9% of their earnings above £21,000, and that loans are written off after 30 years. So if you're thinking of going a sneaky route and thinking I'll just never pay it off, then you've got a long time to wait, I guess.
Yes, you have, and you've got to make sure you don't earn very much. So basically loaf around, watch telly, watch daytime telly, don't do any real work, and for about 30 years, and then you'll be all right.
And then they'll ignore it. Jasmine, thank you. Good to talk to you.
Thank you.
Jasmine Birtles, their consumer journalist.